as I said before, regulation is and could be, work both ways. And I hope, from the debate that we all learn something. The next topic is, I would say, not less interesting and even a little bit more controversial. Our next panel is going to talk about something that half the industry thinks shouldn't exist, and the other half is spending millions and millions of dollars to prove that it has a purpose. I want to invite on stage Chen from EY to discuss and share with us a little bit his vision, and then later in the panel about enterprise blockchain. Thank you.
Okay, so looks like a scary slide. We're not going to really even read through it, but I'll just use this slide as an intro to the discussion. So first of all, quickly about myself. My name is Chen. I am the US blockchain practice leader for EY. And basically what we're trying to do is exactly what this panel is about, and which is make enterprise organizations adopt blockchain and adopt blockchain technology. So the vision that we see, and that's what we're going to discuss on this panel, is how we can create whole ecosystems from manufacturer to customer or consumer, work on top of the blockchain and exchange, on the one hand, a kind of digital money where customer pays vendor, and on the other hand, a kind of token that represents the ownership over an asset that goes from the customer, from the vendor to the customer. So the way we see it in EY, this has the ability to become, or blockchain has the ability to become the single version of truth that today exists within many, many different ERPs along the supply chain, to become a single version of the truth that is cross-ERP and cross-organization. And in order for this vision to happen, we see, wait, they said green is forward. We see four things that need to happen, and I think whoever listened to Paul Brody in the morning heard more or less things in the same line. One, we need to see how private and consortium blockchains move towards public blockchains where entire ecosystems can operate. And I think that the panelists will have a lot to say and even maybe argue about that. We need to see a movement from notarization of documents to the ability to tokenize assets and transact with them and prove ownership, custodianship, et cetera, over a blockchain. And we need the other side, the ability to pay with either stablecoin or digital fiat for these services. And we need regulation to support this all. So with that, what I would like to do is, first of all, can we move to the panelist slide? So with that, I'd like to introduce the panelists and invite you to stage. Daniel from Orbs, Dror from ConsenSys, right? You say ConsenSys. Yoav from JPMorgan, and Gal from Clear. And what we're going to do, or how we're going to start this panel is, I'm going to ask each of you to introduce yourself and give one example of a real, hopefully, production live system that is using blockchain today, because this is what this panel is all about. How do we make, or where do we make organizations adopt blockchain? And just to start it off, I will start with one example, or two examples even from what I see, which is one, the Microsoft royalties example, where we do see a reason for blockchain to exist in an enterprise environment. So in the Microsoft example, what happens is that for every, let's take, everybody knows FIFA as an Xbox game or a PS4 game, doesn't matter, in our case Xbox. For every $100 or $60 that a game costs, this $60 needs to divide itself by many, many, many parties. And all these parties, one thing that they have in common is they don't really trust each other. So they get this sales report, and then everybody checks everybody to make sure that this $60 that got paid by the customer is really divided correctly. So we've got EA Sports, we've got Microsoft, we've got Ronaldo, we've got Messi, we've got FIFA itself. Everybody needs to get paid, and everybody check everybody. And this process takes a very long time. So one very clear example of how blockchain can make life better is once the agreement between the parties became a smart contract, and everybody is a node, and everybody knows that they checked the smart contract once, and the smart contract hasn't changed, you get to a situation where you do not need to reconcile and check all the time that no one else in the ecosystem cheated you. Because I know the smart contract takes care of the calculation. And as long as I agree to the sales report, I agree automatically to the result. And again, this is running in production. And as a result, we reduce the calculation time from 45 days to 10 minutes. With that, let's go one by one. Dror, maybe we start with you as the furthest away from me. So short introduction and a real live production example of enterprise usage of blockchain.
Thank you. So my name is Dror Avieli. I'm working for ConsenSys. I'm doing two things at ConsenSys. The first one, I'm establishing customer success and support, since we already have consumers and enterprise that are actually using things in production. And second, I'm bringing ConsenSys here to Israel, to Startup Nation. In terms of my experience, I am a traditional enterprise software guy. I worked in large-scale software companies that deliver huge software system to big corporation. In terms of, I will mention two use cases. The first one is MVP 1 is already in production, and it's a settlement system between the central bank in South Africa and few of the banks, the biggest banks in South Africa. It is MVP 1. It's a start, but it is in production. The second use case that I think it's a bit more interesting will be MVP 1 in December. And we established a big consortium called Comgo that has right now 15 large banks, most of them are European banks at this time. And the idea is to take, you show the supply chain on your diagram. There is another area that is close to supply chain, and it's about commodity trading that is very inefficient, mostly manual, with systems that are 30 years old. And we are transforming this commodity trading system into the blockchain.
Right. So, okay. So, Gal, your turn, and I know your use case, which is pretty amazing. So I'm really waiting to hear what you have to say about it.
Can you hear me? Do I have to press? No, this works. So my name is Gal Hochberg. I'm co-founder and CEO of Clear. I'll talk about what we do in a second. I'm going to talk about the use case. I come from a background in applied crypto and distributed systems and did a lot of work in enterprise software. And when we were thinking about building Clear, what we realized is a lot of what was on the slide previously about that inefficient in the way enterprises work. And you want to talk about a use case. So what we do, which is in POCs, MVPs 1, going to be in production beginning of next year, is we're automating the trade and settlement process for the wholesale of enterprises. something people don't always realize is that for almost any action we take, there's a big supply chain of companies that have to interact. And what we're doing is automating that to both increase the efficiency, but also to reduce the risk. And unlike financial world, which has really high liquidity and different profiles of risk, we're focused on non-financial worlds. We're doing this in telecommunications. And we're analyzing millions of dollars already. And it's working.
So wait. I want to you didn't do justice enough to what you're doing. So I want to describe it a little more. So every time you go abroad and use your cell phone, the cell phone roams over different carriers. And all these different carriers all over the world have different agreements between them. And today the process of reconciling the usage of every customer for every phone from between every 2 or 3 infrastructure telecommunication companies is very, very, very time consuming.
Yeah.
So
maybe I'll give more color. So let's use an international call as an example. We're going to do a phone call to your investors in the Valley, right? And that's in the States. You do a normal phone call because the internet's not always good. And there's like 5 different companies involved. There's your local company, an international company, another international company, probably AT&T, and then the local provider. And for every one of those hops, there are 4 different teams in each company. There's a sales team that's hundreds of people to sell the service. There's an ops team of tens of people to manage the rates changes and the paper contracts. There's a finance team, and that's times 5. So we have hundreds of people involved with doing your call, and there's 100 billion calls a year. And so that's all papers shuffling around so that we can make a phone call.
Just to check that the agreements that were already made are correct, abided by, and no one screws, sorry for the language, anyone else.
Yes.
And what you are doing is putting the agreement on a smart contract, as simple as that, or as complex as that.
Right. Where it's putting the agreement on the smart contract, but it's more than that. It's also moving the funds to a blockchain environment. Because if you just put the contract, that still doesn't have enough teeth sometimes. And so you want to create not just an environment for information transfer, but a clearing environment as well. If you don't pay, I can take your money. And so that creates a much better and more efficient way of doing business, because now companies know they can't cheat. And so it's both automated, but also more trustworthy, which is core for the business to work.
Right. Between many, many, many different organizations, and this is one of the best examples to all the many people that ask, well, give me one use case for blockchain, right?
Hi everyone, my name is Daniel Peled. I'm one of the founders of Orbs. Orbs is a hybrid blockchain that aims to accelerate L1 protocols such as Ethereum in order to enable large consumer application to transition. And I'm also one of the founders of Hexa Group, that is a consulting and investment arm investing in Orbs ecosystem and other project in the ecosystem. I think the 3 main things when we talk with large enterprises that we tell them how blockchain technology can be useful in their organization is usually around 3 main verticals, which is immutability. If you think about the last example with DocuSign and Ethereum, now you can have the agreement broadcast to the network and immutable with a hash, with a timestamp that nobody can interfere with it. The second thing is a shared global view that multiple parties can collaborate on. And the last thing is the enforcement of settlements and different things within the organization. Even though there is trust, there is errors and mistakes. So if you can do smart contract enforcement, that's add a lot of efficiency. But if you ask me what I'm personally excited, where I think the real innovation behind blockchain technology is around 2 main principles. It's the first time that digital scarcity was created. If you think about it, digital files was always very easy to duplicate and multiply and send, and they were never carrying real value. So that's the first innovation that created a new asset class of digital asset. And the second thing that I'm also very excited and passionate about is that the first time that blockchain enables to do mass collaboration on a global scale in a trustless manner. So I really think that the new enterprises and the new entities that are being formed are completely new ones, really creating huge ecosystems And I think Ethereum is one of the best examples to show that, to showcase it. Ethereum is a non-profit foundation that was founded in June 2014. The token price initially was 30 cents, and in 3.5 years, there was 4,000x growth in wealth creation. And who enjoyed it? The service providers, the developers, the users, the investors, and they haven't signed one legal agreement. So it's a new ability to build open source community-based companies that have aligned interest of investment. And I think this is really where the potential is.
So wait, won't let you off that easy. Give us, please, one real use case where you see this, even if it's not in production, close to production. Where do we see this impacting enterprise?
I'll say one of the examples for the portfolio companies that we're excited about is the whole process of tokenization. I think that what ERC20 is becoming a new standard how you transfer value over the internet. And with that, you can essentially tokenize any asset in the world. And the most unliquid asset today is real estate. There's $200 trillion of real estate that is unliquid. So even though a lot of people want exposure to real estate, there are risks involved, and most of the real estate is not even listed. So we invested in a company that is named Banks that is building the first exchange for tokenized real estate. They can take a building, they can break it into as many different units that they want, and immediately upload it to their exchange and make it accessible and liquid globally to any investor. So I think the whole aspect of transferring value and the ability to create a shared ledger of an asset class that has value is amazing.
Okay, perfect. So, Yoav, your turn.
Okay, my name is Yoav Intrator. I'm the head of the JPMorgan Chase Innovation and Technology Center over here in Herzliya. People are not aware that we're here, so we're here. We're almost close to 100 people. And if you're really interested, we're hiring and partnering also with a lot of the startup community. So I'll move a little bit of, in terms of what the one example that actually is already in production and actually known in the media, it's called the IIN. It's an interbank information network. Today, actually, a few days ago, there was an article that claiming we have more than 75 some potential members already on the network. And this is definitely a network that's going to be growing very rapidly. The network, what it does, from a practical perspective, so we address the, the cross-border payment, but really focus not so much on the clearing and settlement, which a lot of companies actually do. We actually focus on the harder and the most cost-effective, the most costly aspect of the cross-border payment. And this is all of the way the AML, KYC, all of the really checking all of the processes themselves. Today is the most costly process by itself, and obviously the one that have the highest opportunity, that's already was resolved. So we literally, from a company that actually run, just the investment banking run $5 trillion a day, we cannot afford not to have something that is really reliable, secure, and all of the aspects that we're all wondering about what's going on over here.
Okay, thank you for that. I want to discuss one topic that I think will be controversial here, and this is the relationship between private and public blockchains. So on the one hand, I could claim that the only way to really scale up is to use public blockchains in order for me as a participator in an ecosystem that I don't need to link to my insurer's consortium blockchain and to my supplier's blockchain, my customer's blockchain, et cetera. On the other hand, it's going to take a lot of time until we have capabilities like zero-knowledge proof to be able to do this on a public blockchain. So I want to start with you because what JPMorgan is doing in the sense of creating a private permission blockchain, but one that is very closely tied to a public blockchain in comparison to other completely private, completely different blockchains. How do you see that? How do you see this relationship?
Okay, one thing that to remember, JPMorgan is the one that initiated the quorum. So we took the quorum, which is based on Ethereum, and actually opened it to the open source. So JPMorgan really investing quite a lot. Also my team actually here in Israel working on the quorum. Now, the private versus the public, I think we need to look at it almost like in the business, we sometimes replicate our social life, right? So like while the internet is open to all, but we have also our own communities, right? So look at who is my friend. I'm not sure that I want to invite all of the audience over here to my conversation with my family, right? So we share experience, we communicate. The same thing, businesses are not open to all, and there's things that we basically trust in each other. So I think we need to separate between the physical and the logical. From a physical perspective, who cares, right? As long as it's secure, provide what it is. Logically, we will build communities as the way we actually building in a social community. The moment that we'll get to a standardization, and I think the problem is that we don't have standard yet, right? Take a look at what the challenge of the regulation actually have, right? How do you define token? And nobody has a consensus. Until we have a consensus, we'll wait for that point, but again, there's no time to wait because again, business is running. So we will use whatever is the most secure, the most reliable, the most trusted, and we will build a network that will enable us to work with our counterparts.
Right, so before, Dror, before I ask you the same question, I want to say that for us in EY, the ability to work with solutions and infrastructure like Quorum that is very close to Ethereum, but still provides the security and privacy is really, for us, it's definitely a step in the right direction. Dror.
Personally, I think we will all be in agreement here. I think it's a journey. I think society need to realize how they use new technology, and sometimes we resist to be very open. We saw it in the internet. We see it now in the blockchain. We will see a combination of private blockchain, a combination of public blockchain, hybrid between the two. But eventually, I think organizations will feel more comfortable to put things on the public chain, probably in a bit more accelerator mode compared to the journey of the internet itself, because first, we remember the journey of the internet, and second, in blockchain, things are moving a bit faster.
I think in general, we are accelerating.
We are, or we like to think that we are accelerating.
Right.
I think it's about delivery now. Personally, even if you look on the regular internet and the amount of applications that are on the cloud versus the amount of applications that are what I called on-premise, someone said that we just now passed that the majority are on the cloud, but it means that around 50% are still on-premise. So the level of trust, even in the cloud, is still limited. So it will take time. And I agree that some things we would like to keep private. This is human being behavior. Personally, I think that the decentralization move, like I said, will push faster to be more on the public with the right ways to do it.
Right, so Gal, your turn, and again, maybe we are too much in consensus here. I'm really sorry for that, but I know you are working on a similar infrastructure, so share with us.
I'm actually going to be controversial.
Yes, good.
I think that's a false dichotomy. I think we actually know the answer to this if we look at the way the IT world works, at network communications, at compute. The answer is not private or public. The answer is there's a spectrum, right? There's some companies who live on the internet. Facebook, in a sense, lives on the internet, but their data centers, you can't SSH into all their servers, right? There's a private aspect. If you're an e-commerce site, you want to be on the public network. If you're CETA and you're managing the airplanes of the world, maybe you want an SLA'd separate network because that's a bit too sensitive, even though the internet's great. And so I think that not only is it we're going to have both, is that there's things that are in the middle. Say plasma chains, right? Say second layer solutions of various kinds that have operators that are somewhat private but send some things to the public network. I think what we'll realize is that on that trade-off, and by the way, what about a network that's private in the sense that you have to fill up a form to join, but nobody can say no? In that it's not completely, it's not totally pseudonymous. You have to identify yourself, but nobody can tell you not to join. So I think there's a spectrum. I think as time goes on, we'll learn the right trade-offs for each thing, and then we'll see solutions that integrate the different pieces for the thing you're trying to do. Right? Notarization, do on the public chain, that's most secure. But high-speed interactions, maybe you want to go to a private one. It's going to be a range in that sense.
Right. Regarding specifically identity and KYC, at least the way I see it, for enterprises to join and for regulation to catch up, we will not have for long a situation of the semi or complete anonymity that we have today. That will definitely change. It doesn't mean that everybody sees everybody, but it does mean that auditors, tax authorities, etc., do see all transactions and are able to monitor them.
Everywhere, even in Africa, even in Eastern Europe, are you going to do it across the entire world? I think that's going to be very hard.
No, but I'm talking about enterprise. In order to for enterprise to participate.
There are enterprises in Africa and in Eastern
Europe.
Right,
and they all
move
use
money around.
You know, that's a nice discussion.
Ask Deutsche Bank.
Right, but they all use cell phones, right, in order to do any kind of transactions because a cell phone is KYC'd, and you know who the owner of the cell phone is.
You can buy prepaid cards. I'll show you after this if you want. What I'm saying, I think what I'm trying to say is that I think for the legal system, for the governance to be okay with this, there's going to be more and more identity, but we're never going to complete it, right? There's always going to be people who want anonymity. There's a market for that. There's a market, there's going to be a product, and we're going to learn to interoperate. There's still cash around. Governments are fighting it. There's still cash running around.
Right. So, Daniel, how do you see it? And we don't have a lot of time, so.
Yep. So I think what Bitcoin and Ethereum, Bitcoin over the last 10 years, Ethereum over the last almost 5 years established, it's really the L1 network, the decentralized layer, the liquidity layer. And what now the focus on is really to create the second layer, the productivity layers that will enable enterprise and decentralized application to build on. And what we realized during the last year, the process that we've done with customers is that there's not going to be one blockchain to rule them all because of these trade-offs. If you look at Ethereum and Bitcoin, they have more than 20,000 nodes. Obviously, they're more secure and decentralized, but they can't compete with the transaction throughput of EOS or Ripple or Stellar that have 21 nodes. If you look at Monero that looks at anonymity, is much different than Ripple that looks at compliance and working with the traditional fiat industry. So I think this hybrid model that will be created between the completely decentralized public blockchains and the second layer that act more similar to private blockchain. Orbs is pioneering the whole concept of a virtual blockchain that is very similar to virtual machines. I think that is what applications and enterprises are looking for, to have the best of the two worlds. And I think that will be the vertical that will succeed.
Okay, thank you. Very insightful. With that, I would continue this discussion maybe offline, but for now, I think we will wish everybody rest of an enjoyable day, and thank you very much for listening.